Mortgage rates just don't respond to the housing market. They also are impacted by global events. Right now, tensions have pushed oil over $100 a barrel, and that could make buying a home more expensive. And we're going to break down how.
So it's interesting. Most people don't think about like a war in Iran and how it affects me locally, right? Like they think, and real estate is local, but this already we're starting to see. I took an Uber ride the other day, and I was asking the guy, right, because not a lot of these folks rely on that for their sole source of income. And he's like, my fuel costs are up 30-some%. He said it's more than $1 more at the pump. So it starts to ripple through the economy in ways that sometimes we just can't see.
Yeah, it's really interesting, because people, I feel like we're just going in the right direction with the Fed. They had started to ease on rates. Everything was looking promising for rates coming down, and inflation was still teetering, but it was coming down. And now, oil is going to make inflation go up everywhere again.
Well, I think, first of all, the Fed, their target is 2. It hasn't been 2 for a long time, right?
Mhm.
So, and then they got it to 3, and then it just came just barely under 3. So to your point, like it's still significantly higher than the Fed wants because their target's 2. It even says that on their website. So if you look at one of their mandates is 2%. And just, by the way, just think about this. Like even the Fed says, 2 is okay, right? It's interesting because there's this thing the Fed calls the neutral rate, which is when the economy isn't either being inflated or it's not being deflated. And so there's a lot of debate around that. So I would imagine that they think 2% is that number. But let's just put it this way. If, for example, you do get that rate at 2, which has historically been kind of 2 or even below, you've lived through an inflationary time because 2%, it's something. Like over 10 years, it's 20%, right? Mm-hmm. So, but now it's closer to 30, obviously, and now we have this big wild card with, of course, oil.
It's going to be interesting how this kind of all pans out. That Strait of Hormuz, right now they can't get anything across it. So, yeah. And oil doesn't just, they don't just open it and everything just goes back to normal. They've stopped producing it because they have nowhere to store it. There's a lot of demand for that. And it's just like how we saw on the supply chains back in like 2020, 2021. It doesn't just start back up again.
Yeah,
it takes a long time.
Like it or not, step 1, Venezuela.
Yeah.
Step 2, Iran, right? Like you don't do it in a reverse order. So, because Venezuela, as you guys might know, is a huge oil producer, right? So, it's things don't just happen, like what I mean, at a political level like this. So, I think it's going to be really interesting to see how long this lasts.
Mm-hmm. Yeah, and even if it does just stop and start in 5 weeks, there's still going to be a lot of lag on that.
Hopefully it does. Hopefully it's a in and out little shock. I think that obviously this is a choke point for the world. So the oil, the price of oil goes up like this, it affects everyone.
Well, I think that Japan's stock market was down 14 or 15% the other day
because
they don't produce their own oil.
Yeah. Right. And that's the thing, like these other countries, guys, like we we're obviously in a good spot with our oil reserves, and we weren't, but we are now. Not every country has that. So they're relying on other places. Imagine if the U.S. was completely relying on somewhere else for oil and there was conflict. So, of course, so put yourself in their shoes. So that's what's happening. I don't know if it's true or not, but I saw Trump kind of going outside of his normal, country list to try to say, hey, we need help here with the Straits of Hormuz, but we'll see.
And now a word from my paid sponsor, PadSplit. Look, if you've been trying to make single-family rentals pencil out in this market, you already know that the math can be tight. With high rates, properties that would have cash flowed 5 years ago now often break even at best. So what do? You wait on the sidelines and miss out, or Maybe you find a better model. That's why I want to talk about today's sponsor, Pad Split. Here's an example of the math in some markets. A 4-bedroom renting for $2,700 as a traditional rental may be able to gross over $6,000 a month in a co-living setup through Pad Split, depending on location, occupancy, and costs. The same house can potentially more than double the gross revenue in the right market. And before you think, that sounds like a headache, Pad Split helps with member screening and rent collection while still allowing you to operate the property and make management decisions. This is one strategy investors use to try to make deals work when traditional rentals don't pencil. If you want to see the numbers for yourself, go to padsplit.com/hosts. I'll have a link in the description. Just run the math on the property you already own and see if it's a fit. You might be surprised.
Yeah, there's even been talk of them, trying to up Venezuela's, ability to produce oil too, to make up for some of this deficit, because they know it's going to be a problem. And the thing with the oil inflation is it gets into everything. So it really gets into food, it gets into products, obviously your gas tank, but everything runs on diesel, to transport anything across this country or to ship it in internationally. So the fact that it's up over $100 a barrel is going to affect prices everywhere, which the Fed is going to look at when they're looking at inflation.
Yeah, and you guys, you're going to start to see this show up. We've already seen it in like airline ticket costs. Obviously, this could affect summer travel, summer vacations. So think of the ripple effect there. From not only a car, but from an RV, from certainly if you're flying somewhere commercially, that would all affect that. But also, I know personally, because with our construction company, if we're getting roof tile from, let's say, somewhere, there'll be what's called a fuel surcharge now added to the delivery. So we'll still get them, but so that's how this kind of makes its way through the economy, is through these fuel surcharges. So that you'll start to see that. And I'm talking about semis and all the other things that transports. So not just on a Main Street level, but also think of the entire like we have this economy that is completely reliant on driving. Uber Eats and just Ubers themselves or Lyft or whatever it is that you guys are used to, or maybe just commute. Whatever it is, all of that stuff is affected. And so this is not a small issue. And as it starts to make its way through the economy, they say, I don't know who they is, but they say that inflation does take a while to make its way into the economy. So we're seeing the news today, but I would expect you're going to start to see this, within a few months.
Mm-hmm. Yeah. And it really, if this is a short issue, it's probably going to get, rebound pretty quickly. But if it's a longer issue, that affects the 10-year, that's going to affect rates. I've already even seen, rates are up, about a half a point from where they were, maybe not quite, but almost. And I've already seen that reflecting in like how many showings we're having, and everything's kind of really slowed down this past week.
Yeah, and I think that's kind of the point here. That's why we wanted to bring this up and how it does affect real estate. A lot of people don't consider that, but to your point, we've already seen rates actually go the opposite way since this conflict. This could be a wave hitting the beach, but there could be many, many, many more. We just don't know. And I do think that it's something to watch, because if all you got to do is, most of you that listen to this channel know that what happened with inflation under the Biden administration when it went up to 9.1 in June of 2022. So it went up very fast, if you guys recall. So, there's all kinds of reasons behind this. But regardless of the reasons, inflation went up very, very fast. And then the Fed responded. How? They responded by some of the most aggressive rate increases that we've seen. So inflation went up. The Fed responded with rate increases, right, to settle things down. And then whether, I don't know, there's all kinds of debate on this, but rates have now, or inflation rate has come down as a result. But now we're stuck with these higher rates. And as you guys all know, the Fed has slowly released this a little bit at a quarter here, quarter there through 2025. So the real question is this inflation going to be hitting the economy? And if it does, what does the Fed do? Because I think a lot of people were banking on interest rates going down under the Trump administration. And, based on 2016 when he was president before, based on him getting his new Fed chair in there, and based on all those other factors. So this could be a real curveball that it might not happen.